Let's connect with Ashti Seth. She's Vice President and Senior Analyst with Moody's Investor Service. Ashti, good morning. Thank you for joining us. Yesterday, a rating warning from S&P really scared the daylight of currency traders and commodity traders. At Moody's, are you also worried about the current pace of reforms in India?
Well, I can only talk about Moody's, as you mentioned, and as you may know, we have a stable outlook on our rating for India. We have the rating at Baa3 for the sovereign, and the outlook is stable, which means that we note both negative as well as positive trends in India over the last several months. The negative trends have included a slowdown in growth, as well as a widening of the fiscal deficit. Some of the things that have buoyed market sentiment in recent days have, of course, been announcements regarding FDI in various sectors, from retail to insurance to pension, most recently, and also efforts to rein in the fiscal deficit. Our view is that implementation, of course, is key, and that the measures regarding FDI do have some long-term benefits for growth and for efficiency and productivity as well. But in terms of the fiscal deficit, really the diesel hike that was announced will play really a small role in reining in the deficit for this year. But what it is an important step announcing that the government is willing to take actions that are not politically popular in order to rein in that deficit. So as a signal, it's important. In actuality, the effect on the deficit will be limited.
Actually, S&P last evening said that if India doesn't implement what they have promised, then there could be a downgrade. Would you agree to that at Moody's as well?
Well, our sense on India's overall credit profile is sort of, I'll take it in two ways. First is growth in India. It's obviously a strength. It's a credit strength that we recognize, and it supports the Baa3 rating. This growth, in our view, is driven largely by the private sector. Growth is not driven by the government and not necessarily simply by government policies. It's driven by what the private sector chooses to do, keeping in mind government policies. And we think India's private sector is diverse enough, competitive enough, and also quite used to dealing with policy uncertainty as well as infrastructure deficiencies. And that underpins our sense that the slowdown is obviously underway, and we think that if global growth remains below, the levels that we're seeing currently, it could affect Indian growth also in the near term. But we do expect that this slowdown is not permanent. We expect that when conditions turn, both domestically in terms of inflation as well as interest rates, and when global growth conditions become more benign, Indian growth will revive. So we don't see this as a permanent state. We do see this as an extended slowdown. On the fiscal deficit, we've always had a view that this is something that's very difficult to tackle by one or two measures. It has to be a consistent effort over several quarters, several years, and also not in times when growth is already slowing, but in times when growth is actually accelerating and revenues are good. That's when fiscal deficits really can be tackled. So we expect that this is more of a long-term project, and we don't expect results in the next 2 quarters themselves on the fiscal.
Right. So, Achhi, your last credit opinion dated 17 July was stable in India. What happens in the next review? Is it a likelihood and the bias is towards an upgrade or a downgrade?
Oh, well, the stable outlook suggests that the bias is actually balanced between both the risks, which would point to, rating actions on the downside, and the positives that keep the rating where it is. So we do believe that there is a balance between negative and positive at this time, that the long-term strengths in terms of the savings level of the economy, which is higher than similarly rated countries, the growth, which even during the slowdown is higher than that of most emerging markets, those are strengths. And the negatives, which is the fiscal and the infrastructure deficit, those are long-term negatives which will take time to resolve themselves, and these two balance themselves out at this time.
All right, Ashti, appreciate your time and thank you for your insights.